Hello, everyone. Thanks for joining us today. We have a special guest with us today. We have a fun show planned for you. And we have Mr. Christopher Kirkpatrick from Life 180. He is the CEO there, and he is also the general partner of a real estate investing fund named Cashflow Hackin. So, Chris, thanks for joining us. We are so excited to have you today.
It was awesome being here. You
Yes.
called me Christopher, and I thought I was in trouble for a second.
Oh, no, no, no. Okay, Chris from now on. Okay.
There you go. Perfect.
All right. So we have just few quick questions for you.
Sure.
Wanted to kind of get your insight because you are definitely in the real estate space, right?
Yep.
We know
Yep.
that whole life insurance is a great asset to have alongside real estate investing. So I just have three quick questions for you today
Fire away.
to kind of give our viewers some insight onto how they can generate passive income while leaving that generational wealth. So
Mhm.
my first question is, why do you love the flexibility of whole life insurance?
Wow. I think the reason I love the flexibility with whole life insurance is just because of the fact that I believe as business owners, as real estate investors, having access to liquid accessible capital is key. And so when you look at the options, and if you're somebody that believes in the essential importance of having access to liquid capital for opportunities, I would call it an opportunity fund. You realize you start kind of reverse engineering. Well, where am I going to keep this money? Where am I going to, get returns that are going to beat inflation long term? Where am I going to, have this money so it gives me tax advantages and growth and other benefits that go along with it? It's most people keep their money in a savings account or a checking account or something like that. But when you really break it down and you start looking at it, a whole life policy is the only place that's going to get you bond-like returns, muni-like tax treatment, and money market-like liquidity. And then you tap onto the fact that you can leverage it as your own kind of personal line of credit, and you can have your money growing while you're leveraging it at the same time. That creates so much flexibility in every asset you're doing. Plus, because when you take those loans, they're unstructured loans. And so I deal with a lot of people that do long-term buy and holds, that do flips, that do, all sorts of different types of investing. And the importance of having non-structured loans and the flexibility that
Yes,
gives you as a real estate investor is absolutely mind-blowing for
that's
people,
that's absolutely my favorite thing about whole life.
Yeah,
And the fact that you can really take the time to kind of get your investment rolling before you can start repaying.
for sure.
No bank is going to give you that option. They want
Nope,
their money
nope.
next month.
Yeah, no, and that's it. Is like, and so you're creating your own banking alternative, right, by doing that, and that's the power of it. And when you get deeper into it, obviously there's a lot of nuances to it, but it's a super powerful strategy.
Absolutely.
Yeah.
All right, so here is the bomb drop that's coming. Are you ready?
Oh, boy. Yeah, let's do it.
All right. How have you used whole life for your real estate investing?
Yeah, I mean that's look where I am. I am in the Dominican.
Paradise.
I'm in paradise right now. I'm in the North Shore of the Dominican Republic on the Samana Peninsula, in our new hotel in my new studio here. And we were only able to do this because of having access to liquid capital.
Mm,
When you come down here, I think a lot of people in the United States. Well, the bottom line is when you have access to capital, opportunity has a way of tracking you down, right? And so if you have thing I love about whole life insurance is the more you capitalize your account and your own system, your own banking system, if you will, the more that opportunity is going to not only track you down, but it allows you and kind of gives you a set of rules that you can kind of scale your life with, and you can scale your investment portfolio with. And so for me, a couple of years ago, we were looking at doing some stuff in real estate investment. We had some money sitting aside that we wanted to do, and I just wasn't happy with the U.S. market, right? And so looking around at the cash flow, the interest rates, the actual housing prices in the United States, there was just nothing that kind of met the metrics that I was looking for. And so you come down here, and I was introduced to some people down here in the Dominican Republic, and the fact of the matter is, down here, because it's harder to get loans, everything's pretty much paid with cash. There's not as much leverage, and so somebody like myself that's sitting on capital like this, it opens up opportunity for me to get involved in projects that other people just are not capable of taking advantage of because they're used to using too much leverage in the system. And I
mm,
call utilizing your whole life policy safe leverage, because you always have that leverage backed up. And so
absolutely.
as we go through economic cycles, it creates that protection. The
Yeah.
other thing is like having the ability to move fast on deals can get you deals in hot markets. I can't tell you how many people, while the market was hot, I had this meeting with Garrett Gunderson. He was talking about his studio and his log cabin up in the mountains in Utah. He was able to get that deal done because he was the only one that was putting an offer on the table that could close in 10 days because he had access to capital,
Wow.
you know?
Wow.
So that kind of stuff, it can be the differentiator, not necessarily all the time. It's not something you're going to need all the time, but some of the best deals in the world are going to have some of the most competition for them, or they're going to have no competition because nobody has access to capital. In either situation, whole
Mm,
life is going to help you.
absolutely. So even when you
Yeah.
say access to capital, that means cash, right? That's a
Cash,
cash deal. But
straight
it's not
cash.
just a cash deal,
Right.
folks. It's the opportunity to have access to cash, but your cash is still compounded,
Yeah,
uninterrupted.
for
Please
sure.
touch on that for me.
Yeah. So like, for instance, if I needed to, drop a couple $100,000 into a place, down here, I'm able to borrow against my whole life policy. And let's say I had to take $200,000 and borrow against the whole life policy to put into an investment down here.
Right.
Well, when you do that, I have to the people that I'm spending the money with, to them, it's a cash deal. They don't know because every whole life policy has a loan provision that guarantees access to the loan of the cash value in the policy. And
Mhm.
so I take a loan. So I'm basically leveraging or collateralizing the cash value in the policy. And the insurance company is giving me a loan on a guaranteed basis up to the cash value in the policy, right? And so what that looks like is they're giving me a loan for 200,000 at, say, well, 5.2%. All the while, my money is going to continue to grow on an uninterrupted basis. And so the power with that is like $200,000, let's say it's 5%, that's $10,000 a year of interest. If I just manage that interest expense, now what's happening is my money's growing in the policy at the same time. So let's say that grows by 5%. Now I got $210,000 there. Well, if I pay the interest the very next year, if all I do is manage the interest payment, the next year I have a $200,000 loan still because I just paid the simple interest. And the next year my account is earning 5% on 210,000, right? So over a period of time, it creates this sort of arbitrage as a financial system that allows you to create wealth simply by how you shift and move your money and taking over that banking function in your life.
Absolutely. Wow, I
Yeah,
love that. I love that. That's having your cake and eating it too.
yeah, exactly, exactly.
Oh, I love that. All right, so here is a question.
Okay.
Last question for us. How does whole life and real estate investment together give
hmm
security and passive income, not only today, but during your retirement?
Well, I think look at it like this is a hard one to touch on very briefly because there's so many layers of depth to it and so many nuances about the numbers, right? And so
Mhm.
the idea, I think if you understand that leverage is always valuable in real estate because real estate is not a great place to keep your liquid assets, right? Like so the net worth, if you have equity in your home, right?
Right.
That's not a great place because it's not always easy to access the equity. By
Absolutely.
having money in a whole life policy and by paying for the house with a whole life policy and using cash flow from the real estate investment to pay
Mhm.
back the whole life loan, you're recapitalizing your own bank. You're never interrupting that growth. And we always have to think about things in the terms of opportunity cost. That's what if you pay cash for your house, there's an opportunity cost on what that cash could have done for you had
Mhm.
you just financed it completely. And if you finance it completely, obviously there's a cost of borrowing. And so you as a real estate investor have to consider and contemplate the different variables of opportunity costs of what are the rates, what are the terms, what are the different options of capital? What are the down payments you have to put into it? And that's my favorite way to look at it is I want to leverage a bank as much as possible. If they'll let me finance a house as long as possible, I will. Right. For the deal I did in the Dominican, there's no financing. So we needed to, access capital and do it differently, which, this opened up, that opportunity. But for places in the US where you can,
Mhm.
there's an opportunity cost for the down payment. When you got to put 25% down on an investment property, when you pay cash for that property down payment, that 25%, let's say it's a $1 million property, you got to put $250,000 down cash. There's
Mhm.
an opportunity cost on what that $250,000 could have earned you instead of being just trapped inside of the investment property. And so
Right.
what by flowing it through the whole life policy first, you eliminate the opportunity cost because even though you have that equity in the house or in the property, the
Mhm.
money is still growing inside of the whole life policy while it's been deployed to help you acquire that real estate property. So like there's literally not another asset in the world that can do it this way. And I always tell people it's not about the rate of return in the policy, it's about all the efficiencies
Mhm.
and increases of efficiency by a couple percent here, a couple percent there on these big purchase prices over long periods of time. If you can increase your overall cash flow and financial efficiency by 1 or 2% over your entire lifespan, then it's so impactful rather, of creating these big results without having to worry about trying to chase these big returns. Just by increasing financial efficiency, you can reach your goals faster and
Mhm.
more predictably.
Mhm.
Yeah,
Wow, that's powerful. So, giving individuals a secure passive
hmm
stream of income,
for
right?
sure.
Because you have the security of that whole life, and
Hmm
that investment that you're participating in is also giving you yield, right? And so
100%.
you can make money in both places. You don't have to have one or the other, but you can
Yeah. Yeah, I mean, a lot of people think about 401ks and Roth IRAs and stuff like that, and they want to like play that game for taxes. Well, 401ks are tax deferred. I can't think of another place because your whole life policy, you're going to be able to, put money in post tax, so it's like a Roth. It's going to grow tax deferred. You're going to have access to it tax free the whole time. You can put the money into assets like real estate where there's no tax deferral. There are actually tax benefits. If you're a real estate investor, I don't need to preach to you all the tax benefits of owning property and being able to take advantage of depreciation and all these different things. So yes, it is a have your cake and eat it too kind of scenario because you get to take advantage of all these situations. That's why I created the cash flow hacking system. That's why I wrote my book, Cash Flow Hacking, is because of the fact that, we want to make sure that we are increasing the efficiency of our money, and just by changing the flow of our money and where we pay for that money can increase the efficiency, which can increase the returns without increasing the risk. Because most of the time people think to get a bigger return, I got to take more risk.
Absolutely.
And this allows you to get a little bit of a better return without increasing the risk. In fact, it will give you more security along the way.
Mm-hmm. And we're all into risk as long as the risk is in the positive.
For
right?
sure. Yeah, and as long as you have some control over the variables of the risk, right? I mean, there are always going to be elements of the risk that, we have to kind of consider that are, we have to evaluate if it's within our tolerance levels. But, this, once again, it's a filter, and it gives you a system that you can go through and help make your decisions to figure out how to decide if it is or isn't within that risk tolerance.
And the truth is, even if we are risk takers, the bottom line is none of us like when the risk goes the opposite direction, right?
Yeah, for sure. For sure.
And
Yeah,
so
absolutely.
we have to really realize that, does
Yeah.
our money line up with our values and beliefs? And this is one of Chris's favorite question
Totally.
for individuals, does it line
Wonderful.
up? Because most of us are participating in things we don't understand, like the stock market, our 401ks. And guess what? We are feeling the blunt of those losses. And so you don't have to have that with whole life. It's you can have your cake and eat it too. Do you want
Yeah, and I'm just a believer there's no good or bad assets or investments or whatever. It's just, are they good or bad for you, and do they align with your values and beliefs? Because what's good for me might not be good for you. And I think it's the old Stephen Covey, start with the end in mind and reverse engineer a plan to accomplish a life that you want to live. And I think when you do that, it's you kind of stop thinking the way that traditional finance is taught, and you start thinking like, what are the attributes that I need my money to do for me to help me get to where I want to be, and who do I need to become to get to where I want to be? And then it all just starts to kind of fall into line, and it's really not complicated. And personal finance shouldn't be complicated. Not to say that you're not going to have to grow, not going to have to learn and do all these things.
Right.
And you should never put your money into anything you don't understand. And so, this is just part of that process, in my opinion.
Well, thank you so much, Chris, for joining us today. We really appreciate the insight. We'll definitely have you back for another segment on our channel. Please, if people can find you, where can they find you?
Yeah, so you can just youtube.com/@life180, just like my shirt here. And so you can find me there, or you can go to Instagram. It's @real Chris Kirkpatrick, and that's where I am. Those are my two
real one, not the fake one.
Not the fake one. I'm the real one.
Thanks, everyone, for joining us. We appreciate you, and look out for our next episode. Thanks, Chris.
Thank you.